All right, we're back. I'm sitting down with Jamie Gill. Hello, Jamie. How are you doing?
Doing great. Thanks for having me, Jesse.
HashrateUp, hardware sales, advisory, hosting, and site brokerage. Find new and used ASIC deals through the website and the Telegram channel below. Make smarter decisions with HashrateUp.
Couple things we want to talk about, Jamie. Lots of different things. I want to try and cover all of it, but we will see. Talk about the hash price, ASIC markets, hash rate hedging, hash rate futures. You guys recently became REP and QSC in the state of Texas. And also, I mean, we've seen nearly a 200 exahash drop from the top last year, end of last year. So let's talk about that. And then we do a quick fire at the end. Let's start with the hash price landscape. What do you see right now? We've had a recent all-time low. It's absolute mayhem. Now we see a minus 8% adjustment downwards. What are you seeing right now?
Yeah, hash price is certainly compressed and miners are feeling the pain. And this is a time that really separates the sophisticated operators who planned for this bear market and those that were riding the wave during the bull run. So right now we're seeing hash price come down and ASIC prices track as it often does. And we're seeing cycle low pricing across the board on used and new generation machines as well. Manufacturers starting to drop pricing. And with that comes a lot of opportunities for operators, like I said, that have prepared for it. And also a lot of challenges for those that maybe weren't as ready. So those operators that had, cash squirreled away for events like this, and they're able to buy at these cycle lows and refresh their fleets and get ready to accelerate into the bull market when it comes back. They're really reaping the or executing on that opportunity, and then those that are that were a little bit less prepared are feeling the pain, curtailing, shutting down miners, and just doing their best to keep the lights on right now.
Are you expecting when the bull run eventually returns? What are you expecting to see hash price wise?
Man, it's so hard to say. I wish I knew the answer to that. It's unprecedented times, as it always is, so it's difficult to give an exact number, but of course we'll see a rebound. But with that rebound, let's say Bitcoin goes on a run, with that rebound in hash price comes an increase in network hash rate, and those miners that unplug plugging back in. So as we know, difficulty will rise up, and we may not see those numbers in the 60s, 70s, 80s dollars per petahash per day that we're hoping to see. But of course, we'll see it come up from where we're sitting right now and around the $30 per petahash per day range.
Okay, and do you think we're going to see enough hash rate plugged in to keep hash price somewhat compressed? Or do you see AI taking a lot of those electrons? I mean, we see all these miners pivoting. I cover that on these news episodes that I do pretty much every time now. All these billions being invested into AI, especially in the US, where a lot of the hash rate sits. So typically, those were the big buyers, right? The big mining companies, the big public entities buying tens of thousands of ASICs from Bitmain, MicroBT, and whatever. If that doesn't come back, what do you guys forecast? I know you guys do hash rate forwards as well. Maybe tell us about that market and what it's seeing there.
Yeah, absolutely. The forwards market, we've got this available on our website. If you just sign into your Luxor Super App account, you can go and actually look at live bid and ask spread, which I can share my screen here and just give an indication of what that's looking like currently.
Yeah, by the way,
First,
while you do that, this is going to be a very visual heavy episode. So if you're on audio, make sure that you switch to video so you can see and follow all of this.
Yeah, absolutely. So you can see with the 6-month outlook, as is often the case, the further out we go, the more the market is pricing in continued network growth, and not necessarily planning for that bull market run, because it's very hard to predict. But you can see right now spot sitting at $30 per petahash per day. An expected jump here, which is pricing in the 7% negative difficulty adjustment that we have coming up. And then as we continue to push out, the market is pricing in about a 6-month outlook in around that $28 per petahash per day mark.
Wow.
And if you come over here, this is the Luxor Super app, and you can actually see the live view of the market here with the bids and the asks, where mid market is sitting and where we're currently at with spot, just to kind of give a live visual of where those orders are and those bids and asks are sitting, and how that mid market is being calculated.
So if I want to put my money where my mouth is, Jamie, how do I do that? Explain that to people. Maybe keep sharing your screen to show if there's anything you can show there. But like, what do I do if I'm not a proficient investor in futures and forwards? How do I bet on hash price being higher than 30 in 6 months from now?
Well, you can certainly reach out and you can take a position that enables you to be long hash price and get exposure in that way. And essentially, you can buy physically delivered. We have two main products on the Luxor derivative suite, and one of them is a deliverable forward where you actually have physically delivered hash rate that is settled between two parties. So there's a miner on the other end, and you guys agree on a price for a set duration. That duration can be generally we say the minimum tenor is 1 month and maximum is 12 months, but we're open to bespoke solutions. And the derivatives market that we've built out over the last few years has really reached a point of maturity where last year we settled over $400 million in contracts, and at our peaks settling over 25 exahash per day. So it's a bit of a chicken and the egg when we first started this, and we had to first educate the market on the fact that these tools were available. But now that they're here, you can come and essentially one option would be you can get physically delivered hash rate and or a non-deliverable forward, which is just a contractually settled agreement where you're basically speculating that hash price would either increase or decrease.
I mean, yeah, I've had the guys on previously. I must have them back to give people an update on this, because things change, regulation changes, volume changes. From what you shared, the spreads are still quite far. So what I remember is that making deals is not super easy and smooth because the bids and asks are just so far from each other. So you guys need to really do a great job to close that spread and convince either side to spend more money or give up more.
Absolutely. And the further out the duration, the more difficult it is to find two parties that are speculating in around the same ballpark. But in the shorter durations, it's absolutely easier.
Okay, so cool. I want to talk to you more about the ASIC pricing. I'm not sure how plugged in you are to the used ASIC markets. I know some other team members of yours are also following up on that. What are you seeing there? Maybe give me some more details. Like, what machines are you seeing being sold? What are sort of the price levels? What are the volumes as well? I would estimate that there's a lot more sellers than buyers right now. How easy is it to convince sellers that they will not get the pricing that they want? I'm having a lot of those discussions. Explain that to me. Give me a bit of feedback.
Yeah, right now, I mean, the ASIC market in general is fairly transparent, and it's less of us convincing these sellers that this is the price that they're going to need to take, and more so just making sure that these ASICs can find the right home. So what we've seen over the last few months is ASIC prices pretty aggressively dropping and tracking as hash price drops as well. And for reference, like US landed S21 XPs with remaining OEM warranty. Less than 3 months ago, they were $15, $16 per terahash. And now they're going sub $9 a terahash, sub $8.50 a terahash.
Wow. So
that's a pretty severe drop. S19J Pros, more of that like mid to old generation machine. 3 months ago, we saw trading around the $3 per terahash mark, and now they are sub $1. There's J Pros going for $80 a terahash or less in a lot of cases. And then models higher than 30 joules per terahash, like the S19 Vanilla, the 95T, that's dropping down to pretty close to its scrap value, where you're no longer really there may be liquidity on the market, and it's just you're not going to like the price. There, it gets to a point where it may not even be worth it, and you just move to scrap the machines.
Yeah, it's interesting. It's a bit of a curveball, but I've often tried to figure out how the bottom value being scrap, or the bottom price, I guess, that you can achieve being scrap value, what effect that has, because it's independent of efficiency, right? The machines all weigh the same. So I wonder if there's like I don't know if that's sort of a set fixed minimum price for all the machines, independent of efficiency, if that has any effect on pricing at all.
It does, and it's a great point because it gives everybody a nice floor, and you're never getting to a point where you're getting offered $5 for a machine. Like at least you're going to get $30, $25 for a J Pro, something like that from scrap value. So as if a J Pro does start to cross below that 50 cents per terahash mark, and you're starting to get $50, $40 for a unit, then it may make sense for you to move to start to scrap those. And there's still liquidity. We're still moving a very sizable amount of ASICs during this time, and it looks different. Like in Q1 alone, we've moved over $35 million worth of hardware, and
Wow.
a lot of that is the operators, like I talked about at the start, more of those mid-size operators who have planned for this. And as we all know, those larger pubcos, many of those are moving and focusing in their capital and time on that AI and HPC expansion, but there's still a large market. And with that pivot of the pubcos into those new markets, it frees up a lot of those ASICs to come into the secondary market, where those operators who are ready to execute can refresh their fleet, get rid of their S19J Pros, their M30s, and move into that new generation of 15 joules per terahash and better, to be able to scoop those up at really incredibly low pricing. And when that bull market comes back, they'll be well positioned with the best efficiency miners they can get on the market at reasonable capex.
Buying Bitcoin miners should be simple, safe, and fast. Altair Technology delivers exactly that. Based in the US and shipping directly from St. Louis, Altair eliminates all the shady messaging groups, customs and tariffs issues, and makes sure Bitcoin miners get to you on time. Altair stocks leading commercial ASIC miners, efficient home units, and all the critical parts you need, backed by real inventory, real support, and a team of people that you can rely on and actually mines Bitcoin. Thank you so much, Altair Technology, for supporting the show. And without further ado, let's get back to it.
You have to deal with disgruntled customers who buy machines, and then the week after that, Bitmain slashes prices, sells S19Ks for $3 a T and less, and all of a sudden the miners cost, I don't know, 30% less than they did the week before.
It's unfortunate, and we do our best to advise and share all the market knowledge that we have prior to the purchase, and that's what we're here for. We're not just a broker passing along hardware, connecting point A to point B. We also are, we have in-house logistics and shipping, and we help like the whole process. But it does happen, and it's unfortunate, but it is just part of the industry. The pricing moves. Same thing can happen in the opposite direction, where we can sell ASICs and sometimes even the next day they're worth significantly more than we sold them for, and we don't get upset. That's just the way the market moves, and you got to do your best to educate yourself prior to your purchase, and just make an educated guess with multiple different hash price scenarios. This is what I always suggest to customers. Like when we release our reports, we tend to release 5 different hash price scenarios: super bull, base, bear, and super bear, and use all 5 of those. Hope for the best, plan for the worst, and that's all you can really do. Build out your models and stick to your guns.
It's exactly what I do. Like if customers come at me with different Bitcoin prices, I'm like, Bitcoin price does not matter. Matters in the short term, maybe, but midterm, you better have a scenario. Super bear, and if it works at super bear, it works at bear and above.
Yeah, exactly.
So I do the same thing. So whenever anybody thinks about modeling it's not actually that difficult. Like once you understand hash price and you want to model an investment, you just put an average hash price for the next 3 years assumption, and you can strip away all the difficulty adjustments and network hash rate and Bitcoin price increase. All of that, it can be baked into one fairly simple figure. But yeah, no, I think this is, as you said earlier, a very unprecedented time, as it often is. I think what's different now is the volume of used ASICs that we see, because there's so much network hash rate growth in the past, right? And all of that growth is now, sitting idle on pallets because it's been previously replaced or is being replaced now. And do you see at Luxor, do you guys see any sort of innovative or increase of these sort of edge cases because of all that used equipment? Do you see more solar, more 30% uptime solar farms? Do you see more wind stuff? Like, what projects do you sort of see that you didn't see 4 years ago that customers want to buy machines for?
It's always exciting to look at alternatives, behind the meter projects, lower uptimes, but maybe capitalizing on some grid incentive programs or emerging markets like in Latin America, the Middle East, etc. But to be honest with you, the tried and true, just if there's low cost power and they've got the facility built out, it's really just finding the lowest capex, the fastest ROI, and getting those machines plugged in. The market as a whole is shifting towards a focus on hydro, and that'll be interesting to see develop and continue to develop, because it does require more capex, it does require more know-how, and it's the future of Bitcoin mining. Most likely is going to be that more compact footprint with a better density, more efficient hardware, liquid cooled. However, it's not a quick process. So although it's exciting to think about the alternative projects behind the meters and emerging markets and stuff, the tried and true, just low cost power, the operators who have access to that are the ones that are scooping up the ASICs. And as we've seen in a number of different places, a lot of those emerging markets that seem very attractive remain attractive for finite amounts of time, and then there's some event that shifts that. So if that's the government getting involved, or increased taxes, or just things that unfortunately large capex that's been dumped into some of these locations that feel very promising, like it's the future of Bitcoin mining, like Kazakhstan, like Paraguay, like Ethiopia. Factors come that make it significantly less attractive for miners. So I would say the solution isn't necessarily immediately looking to flush all the ASICs out of the US and just let AI kind of roll over and say, okay, it's time to start looking elsewhere. It's just to continue to find those facilities, find those sites where flexible load is needed, and you can get your cost of power lower.
Yeah, no, I just keep thinking of the 1 gigawatt mining farm by Riot. I think it's in Texas, Rockdale. I think sites like that are a thing of the past. Like, you're not going to be able to raise the funds for sites like that without justifying that you use it for AI. Prime location, high uptime, what shareholder is going to say, yeah, sure, no, let's sacrifice that obvious margin. And that's where I think this is different, because now, how does MicroBT and Bitmain position for this, right? Are prices for miners going to increase again when the bull run comes? Are they going to increase as much? If there's such an oversupply, like, why would I buy this is another thing, like the efficiency steps are smaller now. Why would I buy the sub 10 joule per T miner that runs at a premium, and no doubt will cost premium prices once Bitcoin price goes up again as well? But I don't think M50S++ or M60s will do the same thing, but I mean, they're still at 17 joule. Is it worth that? I think you guys recently I released an episode talking about sort of ASIC pricing and how it's priced, the dollars per terahash, the dollars per terahash per efficiency. And I think you guys made me aware of that method the first time. So I think that metric, dollars per terahash per efficiency, is going to become really important going forward, because at the end of the day, if you only get, I don't know, 3-4 joules extra, or 3-4 percent or 10% extra, excuse me, on the efficiency gains, like, is it worth spending 50% more money? Because these older units, there's no demand for them really, because all of that AI capital being deployed and yada yada yada. You know what I'm trying to say? It's tricky, man.
Absolutely, it is tricky, and it is and always has been with Bitcoin mining a question of time to ROI. And does it make sense to deploy that additional capex upfront to run towards your ROI, that finish line? And something you said at the start, the gigawatt facility being a thing of the past. I think you're right for a pure Bitcoin mining play, but I do think this new era gives rise to things like mullet data centers, as they call it, with AI in the front, AI HPC in the front, SHA-256 in the back.
Yes,
I think there is an opportunity for those hybrid plays,
sure,
where Bitcoin mining is still a key part of that facility that utilizes any.
Yeah,
it's okay.
No, I agree with you. Sorry to interrupt. It's just I've had this thought earlier as well, but the same thing applies, right? Are you really going to buy the 9.5 joule per T machine at a high premium to then plug it in for 50% of the time? You're not.
Totally.
You're going to buy an M50S++. That's where the demand is then. I feel like we're so far away from shareholders that invest in AI understanding mullet data centers. I love that term, by the way.
Me too. I love it, and I think it makes sense. It's a natural pivot. There is, especially if it's being used for training, and there is downtime in those data centers. I think Bitcoin mining is a natural need there. And when there is, like with LuxOS, you can curtail in seconds, instantly, and you can come back online depending on how careful you want to be with the hardware within like a matter of a couple of minutes. And when there is like millisecond shutdown and come back online, there's some really exciting opportunity, I think, there, where if there's different ebbs and flows of, let's say there's an LLM that's inferencing, and it's got its peak utilization from 9 a.m. to 5 p.m. and then midnight to 6 a.m. it's like a real lull. Well, there's a lull in power consumption, and to monetize those gaps, you need to be careful and leave a buffer, of course, and you need to be able to shut down in case there's some type of event that caused the inferencing to spike. But it's exciting to think about all the opportunities that Bitcoin mining has to fit into this new future of AI and HPC.
This episode is sponsored by HashBranch, the easiest way to mine Bitcoin in the US. Sourcing hardware and rack space usually is a mess. Bad deal structures, misaligned incentives, and no visibility after deployment. I have placed tens of thousands of ASICs in partnership with HashBranch. What I like most is that they cut through the noise. Fair pricing, aligned terms, and access to hosting that actually works. Use code HashrateUp100, visit hashbranch.com today to get $100 off of each miner that you order. I mean, you already mentioned LuxOS. I guess I want to ask you, Jamie, like the miners that you see surviving 27 hash price, 30 hash price over the last couple of weeks and months, what sort of strategies did you see that are mainly not as commonly spoken about, besides just, obviously hunting for low power or gaining more efficiency? What else have you seen that people have done that maybe surprised you to keep them profitable?
Well, to start, it's surprising to still see that there's operators out there with compatible machines with LuxOS, with mid-generation hardware like the S19J Pro, and not using LuxOS and third-party firmware to increase that efficiency, because with a underclock you can get 30% more efficiency. And Bitmain has their chips overvolted, and our auto-tuning algorithm finds that decreased voltage to be able to run at that same frequency that you're shooting for. And so with all that efficiency left on the table, first thing is like still coming across operators that are running on stock, even with new generation machines. Not only does LuxOS help with the longevity of the machines with thermal protection, but also that increased efficiency. It's like that's step number one. So just make sure you've got that LuxOS running on the machines. You've maximized your efficiency there. Ensuring that you are getting as much for our operators in Texas, and a large portion of the world's hash rate is there in Texas, specifically on ERCOT, making sure that you're participating in as many grid programs and ancillary services, demand response programs as possible, making sure you're getting CRR credit pass-throughs from your rep, and using LuxOS to be flexible with the grid and make sure that you're executing on that as much as possible. And also finding that opportunity to refresh your fleet and not being afraid to really lean into this opportunity with cycle low pricing and finally hit that refresh. This is the push that really separates the next wave of Bitcoin mining. Every time there's a bear market, it's sort of like it flushes out. There's a lot of operators who can't continue through a sustained compressed hash price environment like we're in right now. And that's where mergers and acquisitions come in. That's where machines start to get unplugged. And unfortunately, companies may not make it. Or you have a refreshed fleet, you come out of it and you're stronger than ever. And you lean into Bitcoin mining when others are running for the hills.
Fair enough. All right, Jamie, explain to me, you guys just became a REP and QSC. Explain to my viewers what that is and why that is important to you guys.
Yeah, it's really exciting. So this is like the next chapter for Luxor. This is our latest business line that we launched. We launched this a few months ago in October at NABS in Texas. And essentially an REP is a retail electricity provider. And so in Texas, ERCOT specifically, it's kind of the wild west of energy. And anybody who is turning on a light switch receives their bill, and they need a rep, an REP. And generally speaking, there's a lot of existing reps out there that have been reps for a long time, but we're coming in as the Bitcoin native rep. And we've got these unique value adds that we attempted to bring not only to our existing ecosystem, but also now expanding out to other operators on ERCOT, other flexible load operators, as well as moving into AI and HPC. But essentially, as a retail electricity provider, generally you need some collateral. And one thing we've moved to do, and we're the only rep that's doing this right now, is we take Bitcoin as collateral, which is very exciting for those that want to maintain their Bitcoin upside, don't want to have USD, a depreciating asset, sitting there as collateral. Instead, maintain that Bitcoin upside. Also, we could take USD. We've also enabled a pathway to miners potentially putting up zero collateral, and that's through our pool. And we've given miners the opportunity to settle their energy bills directly from their pool balance. And this is a total game changer, because instead of taking your mining rewards, your Bitcoin, turning it to USD, sending a wire to your rep to pay your energy bill, now you just mine away and we can net out what you owe in energy direct from your mining rewards. Smart. And if you opt to do that daily, we can essentially bring your collateral down to zero. And that miners are really enjoying. And that's a big value add that we've got as well.
Quick question. Is there a way to use my hash rate as collateral?
That's essentially what we're doing. So with it, kind of, with you having your hash rate pointed at our pool and settling up daily, it minimizes our exposure by you paying every day on a daily settlement, which daily settlement is available through platforms like Sonoda right now with miners, but it's in a third-party way. It's very different. With this, if we were your rep as well as your QSC, which is qualified scheduling entity, everything under one roof, it really simplifies it. You can visualize your energy bill right there in your mining pool dashboard. But if you are paying out of your Bitcoin rewards from your mining pool and you're doing it daily, and we've reduced your collateral close to zero or zero, then we're sort of using your hash rate on our pool as that collateral that we need.
Yeah, man, that's amazing. All right, cool. rep taking Bitcoin as collateral, and maybe also like no collateral if you can settle directly from the pool. Anything else? What else sets you guys apart? And what is a QSC?
QSC, qualified scheduling entity. So this means that we can participate in, we're qualified to help miners participate in demand response ancillary services. And with this, we've come into the market, and it's really cool for miners to be able to see, visualize, and execute everything in one platform. So a lot of people are used to having dashboard, and their energy bills with the rep, earnings that they can go visualize with their QSC, and go to their mining pool and maybe a different firmware provider, and maybe a loan with a traditional finance route. But with Luxor, our aim is to bring it all under one roof and enable Bitcoin miners to pay their energy bill directly from their Bitcoin mining rewards, visualize those bills, and just have it all under one roof. So it's really exciting, and it's been fun entering this space.
And then, so let me ask, do you guys then have to buy power on the open market that you sell to your clients, or is that not the function of a rep? Am I misunderstanding what the function is?
So it's up to the Bitcoin miner how they want to participate. And what you can do is you could basically hedge through a PPA, which we can execute for the client, the customer that's receiving the power. And with that PPA, power purchase agreement, they're locking in a set power price for duration, or they can participate in ERCOT's day ahead pricing, which means that they're at the whim. So if there is an event that causes ERCOT pricing to increase, then naturally they'll need to turn off their Bitcoin miners. And if the opposite is true, where demand's gone down and as flexible load they need to come on and ramp up, then that's a good time, and pricing will go down. And something that becoming a REP and QSC and really entering this energy market has done for us is unlocked the ability to offer something called intelligent mining, iMining. And this is really cool. So when you combine LuxOS, Luxor Energy, our access to live hash price data, access to live ERCOT day ahead pricing, and live ERCOT pricing, we can automatically adjust your fleet in real time based on the parameters that the customer sets to the most profitable level based on what's going on. So if hash price goes on a run and it increases exponentially, energy price goes down, your whole fleet comes online. If there's an event and ERCOT pricing has gone up, power pricing has gone up, and hash price is sustained, then we will curtail your least profitable load first, or underclock it to a more efficient level. And then as that pricing regulates, we'll move your whole fleet around dynamically with LuxOS to make sure that you're at your most profitable level. And that's really exciting.
Yeah, it's like a full stack value chain integration, because it's that's really exciting. We should do another episode just on that down the line to see what the like real world, once you tested this for a while, maybe with a client, go through what they've really done and achieved utilizing all of these tools together. All right, cool. Jamie, before we close out, I'm going to ask you 5 rapid fire questions. Are you ready?
I am, but real quick, before we end off on iMiner, if you don't mind, and sorry for the viewers that are listening at home and not watching live, but I would love to show a quick visual of iMiner working real time, if you don't mind.
Cool, go. Yeah, absolutely.
Awesome. Yeah, so what we've got here, visualized in our energy dashboard, you've got the gold line, which is the mining load, the red line, which is ERCOT energy pricing, and then the white line, which is something we're uniquely able to provide to the customer, which is the break-even price. We can do this by being the energy provider, by understanding what they're paying, by understanding each individual ASIC's profitability levels at different clock speeds. And as you can see, as energy price comes down and the intelligent miner increases the mining load here, it says, all right, energy price has gone down, time to bring back online maybe S19J Pros, the less profitable load, previously just running S21s. And then as energy price comes back up, that mining load, and it crosses over the break-even price, that mining load comes back down. And if it's even the S21s aren't profitable to run anymore. It's fully curtailed. And then as the energy price comes back down, the mining load comes back online.
Where does iMiner
And
live, Jamie? Is it a software dedicated on a machine in the data center? Where does iMiner live?
iMiner is going to be a function of essentially those clients that are using our firmware as well as within the energy ecosystem. And yeah, so it'll be a function of kind of combining those business lines right now.
Awesome, dude. Yeah, cool. Awesome. Anything more to add? Otherwise, we'll jump to the rapid fire section.
Good to go. Let's do it.
All right, cool. Number one, hash price floor. Has Bitcoin mining ever been harder?
I think so. Right now, with the institutional adoption and, Bitcoin mining for a long time was a sort of dark and scary place. And now it feels as though it's come into the light. And there's brokers that you can trust, and you can purchase hardware. You can run firmware on your device without a fear of there being, all sorts of leaks or hash rate being stolen. And so I think there was a time Bitcoin mining might have been harder, even though you might have been making more money. There might have been other external factors that made it more difficult. So I think there's so many tools available, and that's really what Luxor's built. We've tried to build for all the miners is everything you need to be able to weather the storm in the bear market and maximize the margins in the bull market as well.
All right, cool. If you had 100K and cheap power, what ASICs would you buy?
Oh, how cheap's the power?
I don't know. Call it 3 cents. Something.
You know
on
what
gas.
I'd buy right now? I would buy S21 XPs. I would get them for $8, $8.50 a terahash right now, and get some of the most efficient air-cooled miners, less than $10 a T. I'd put LuxOS on them. I would get 10% more efficiency, so we'd be running at 12, 13 joules a terahash, and that's what I would do if I had cheap power and 100K to burn.
On a set, do you know out of the top of your head at 7.5 cents what the time to ROI is on that?
Time to ROI is going to be if let's assume we get a bounce in hash price up to $40 per petahash per day. The time to ROI is going to be inside of a year. So if you've got LuxOS on there and you're optimizing the profitability on those, and your capex is around $2,000, $2,300 to that machine, you can get that time to ROI inside of about a year and a half.
Wow, that's insane.
A lot of things have to go right.
Yeah, but I mean, a year, less than a year, is worth it in a lot of cases. Cool. Biggest mistake miners make in a bear market. What do you see? The biggest mistake they do?
It's going inside for the winter and just closing down and not looking at all the tools that you have available. You're not alone in this bear market. We've got a whole industry out there that's weathering the storm together. So when the bear market hits, it's the time for action, and it's the time to get involved and get connected. It is not the time to shut down and just lick your wounds. It's really time to accelerate and make some actionable decisions that you're going to be able to reap the benefit of when we come out and accelerate out of this bear market.
Yeah, I fully agree. All right, last but not least, hash price. Do we cross 50 this year or no?
I am an optimistic guy, and I want to say absolutely. I have no idea for sure, and if I did, I would be a very rich man, and I may not be sitting here on this podcast, but I want to say yes, and I think there's a lot of factors that can get us there. A bounce in Bitcoin price would obviously be nice. Continued difficulty adjustments like we're going to see. We've got a -7% difficulty adjustment pending right now. More difficulty adjustments like that, a bounce in Bitcoin price, and the continued pivot of pubcos to AI and HPC should make for better hash price times ahead, but we will see.
I agree. Let's get involved. Jamie, thank you so much for your time this time. I'll hope to see you back soon, maybe with a client to run through the full stack to see what efficiency gains they've done. Thank you for sharing your knowledge and your expertise. Come back soon. Thank you. Bye. See you later.
Thanks, Jesse. Bye.